Hey guys, Mike here. So we got a shortened holiday week ahead of us. Still got some earnings, got data coming out. Just FYI, I might be putting some videos out. I'm not sure because I'm going to be leaving as of today. And so won't be back till next Saturday. But we'll be on a farm in the middle of nowhere in Alabama. So we'll see how it goes. I might not. So if I don't, that's the reason why I haven't gone anywhere, okay? But this video is going to be jam-packed. We're going to talk about a couple things you might not be aware of that are causing this market pressure, okay? Also, we're going to discuss the coming up week, especially the Monday, okay, tomorrow. Something to watch out for very carefully, okay? I'll show you just a real quick rapid shot of what's happened over the last 10 to 11 years on the Monday preceding Thanksgiving. And so if we don't have this happen, you kind of go, oof, selling pressure is definitely persisting, okay? And then we'll get into our Mag 8 stocks, look at those as well as the indexes. But real quick, if you hadn't done it already, make sure you sign up for TradingView, 80% off, 1 free month. Just hit the first link down in the bottom of the description. Do not overpay for things. Get what you need, okay? Look at all the alerts and everything they offer. So go ahead and get that. Now, as I was sharing with members with our market update on Friday, what I do at the end of every week, there's this chart. And I actually hadn't tracked this chart in a long time. So it wasn't doing anything, as you can see. But this tracks 3 different forms of liquidity for the market, coming basically from the government here, okay? And you can see that big drop. And that's a big drop. If you look to the left, you hadn't seen one of those since, like, if you look at the date, that's actually like 2022. But when we zoom in, you can see it was pretty consistent across, and all of a sudden, we just started selling down for the next 84 days. This precedes market movement, okay? That always happens. Liquidity goes up before the market goes up, and liquidity goes down usually before the market starts to turn down. And a lot of this was just exacerbated by the government shutdown because it went on for so long. I'm sure you heard about, the Fed repo program and everything. And so, again, this is just liquidity runs markets, right? So this has something to do with that. Just FYI, behind the scenes. You just don't really know what's going on, but that's what's happening, okay? Another thing you see what's happening is, or have seen what's happening is CTAs, right? They're not trend setters, they're trend followers a lot of times. You can see a month ago where they were at on the indexes, NASDAQ, all that fun stuff, and you can see they have decreased, okay? Because what happened? Trend shifted down. So they started selling. And so that's another thing that exacerbates this whole thing. Vol controlled funds as well, same thing. And so you see the NAIM exposure index normally hits 100, they go down, but of course they've been selling as well, which exacerbates this downward pressure. When these companies need to raise liquidity, what are they selling? The big boys. That's where they got most of their money anyway, okay? So something to pay attention to, but that's what you see happening. And we'll see if that continues. Now, as you can see on this one, we are here normally, again, seasonality, but you can see clearly this is when normally you'll get your pickup. We'll see if that happens. One thing to watch out for is going to be Monday. We know Mondays are good usually already, okay? Thursdays suck. We won't be open Thursday, so don't have to worry about that. Wednesdays are good too. But on Mondays in particular, the Monday before Thanksgiving, this is what you want to watch out for. I went back the last, I think 2014, that gives us 11 years right here. And you can see, I'm going to pay attention to the open. A lot of times you get these gap ups. This was 2024. You go to 2023, it didn't get the gap up, but it did move up throughout the day, almost 0.85%. So, and this is the S&P. The Qs will be up over 1% when the S&P is up that much. Again, looking at 2022, we went down. What was happening? We were just trying to bottom out of a crash. And so that's one. Make sure you pay close attention to this. Ready? 2021, boom, big gap up right here, as you can see. You can see this one right here, about 0.72%, 2020. You can see in 2019, that was a big one and just kept going, okay? 2018 right here, what are we in? We're in a crash, okay? So we're heading down, taper tantrum, all that fun stuff. That's two, okay? This was 2017, kind of flat, but not red, just flat. And then, of course, our usual gap ups on 2016, 2015 had a gap up about 0.4% up in the first hour. This is an hourly chart, by the way. 2014, there's your gap up. So that's the last 11 years. And you got 2 red ones. 2018 was a crash. 2022 was a crash. We were trying to bottom out at that point in time. But so that's why I want you to watch Monday tomorrow very carefully to see, do we at least get a green day? All right, because history says that's what should happen. Now, again, you have lower volume. But we're coming into this week under selling pressure, even though we got a nice pop on Friday. We're going to look at the chart to see if that can continue. But I think if you end up getting a red Monday, that's not good. And so, again, I think a lot of this will depend on crypto, what happens whether it starts to try to bottom out or it keeps going down because it seems to be leading the way, at least for risk on assets, that's for sure. But, you know, looking at crypto, you can see, I mean, this thing continues to kind of just stall out, sell out, underperform, all that fun stuff. And when you look at the indexes, I told you guys right here what to watch out for on Thursday night. I said, watch right here to see if ES takes out that white line. That's the October low. Everything else took it out. Okay, SPY, QQQ, NQ, you name it. It did not. So what happened? We came down that night. Some of you guys put in the comments, you paid attention. It touched it and then came down at like 4 in the morning, 4:35, whatever it was. Took it out. And you see how important that level was. Look how many times it revisited it before we even opened. Okay, and then we rocket shipped on Friday. Levels matter, especially big levels like that. And then, of course, let's remind everybody, what do we got? ES touched the 20-week, took out the October lows. NQ touched the 20-week, still below it right now as I'm speaking, but also took out the October lows. SPY touched it, bounced. Dow Jones to the penny, touched 20-week, bounced. SPX, whatever you want to follow, bounced. So everything's got this touch. Most of them have taken out their October lows. Okay, so major levels taken out, big time moving average on a higher time frame. Matter of fact, QQQ took out even some of the September liquidity right there. So pay close attention to that. Now, what kind of movements can we have? What you got to see is this trend line broken. You got to see this area with those two imbalances right there get broken above, turn into support. So that's good confluence to break through. If it breaks through that, that's pretty good. And then we got to see what happens here because that'll give us our fourth touch right there to see if we get rejected. Clearly, also that makes up for a great rejection point, right? If we do come up, let's say we get the green Monday, it comes up, boom, and we get rejected from here and start to sell down, you can see the white line. You can see where this trend line has been support. All right, should be resistance coming back up probably, most likely, especially those imbalances right there. But you start breaking 65.39, you go into 64.92, and then 64.57. You can see the levels, okay? And that's if, obviously, the selling pressure persists, if we still got liquidity issues going on the SPY, if that's what you follow instead of futures, it looks different, right? Because we don't have all the overnight play to look at here. But you still got that trend line. You got huge imbalances up top, which are a draw to move up. They try to sit there and mitigate this, right? But it also should slow things down unless we get an explosive move up. All right, but that is a great rejection point. If we end up hitting that, because I guarantee if I draw a fib from that top of that red candle down to the bottom of that wick, that's going to be probably either golden pocket or 0.79 fib. And so again, it's already taken out those lows though. So that's the thing. So really, if we get the buying pressure to move up, it absolutely, you know, my thesis is to the upside right now just because of what's up above us versus what we just did down below. But I'm also not stupid to realize I can't predict the liquidity issues. I can't predict these vol funds selling, CTA continue to sell. That's the problem. And we got much lower volume coming in. So it won't take much to push us down, and it won't even take much to push us up, to be honest with you. And so watch the options market, all that fun stuff. Now, looking over here, SPY was hilarious on Friday because, man, the administration did everything they could to push this market up. We were stalling out, and look at that big move. Man, that's a big move in a short amount of time. What'd they bring out? Fed won't get key inflation data before next rate decision as BLS cancels October CPI. Now, when it comes to the rate cut, I keep you guys updated on this. Look at this jump. 70% now. We went from 29% to 39% to 70%. This was at 70% before that news, though, because Fed presidents were coming out and talking like, oh, maybe we can do a December rate cut. And I also remember what was pushing it down. The Fed presidents, you know, these people, I swear I'll be nice about this, were coming out going, well, we got a problem with inflation maybe. I don't know. Maybe we won't cut. And you're going, so what do they do? Well, let's just take the inflation data from you. How can you make an argument for not cutting and there's an inflation problem when you have no inflation data? It's kind of hard to do that, right? But no, you know, and so that's a problem. But the last jobs data you got show, well, maybe it wasn't as weak as we were, even though the job data for that was weak. So they're kind of taking this argument away from them, saying, well, we'll just take that data away from you, and you just won't have the inflation data. Oh, well, you know, so there you go with that. So now we're at a 70% move, and that's another reason why if that rate cut stays on the table and liquidity issues aren't a problem and all these funds that were selling all of a sudden stop selling and start to come back in, that's when you can start to see these moves up, right? Now, also, what do they do? This one tripped me out. We're stalling out. We're starting to come back down, which is normal. All right, we're taking out a lot of liquidity. Boom, 0.5% move up in 4 minutes. Wow, what was that? A tweet. And it said U.S. moles, or actually it was President Trump moles, letting Nvidia sell H200 chips to China. We have seen this one so many times. They didn't even hold these gains, by the way, because we've seen that at least 8 times. I mean, that's just recycled news, but it works, right? Algos jump on that kind of stuff. And you can see it wasn't a bad day as far as if you're looking at SPY and QQQ, that's good. But if you look at everything else, man, they were going crazy. The Dow Jones Transportation was up over 3%. For crying out loud. RSP was up over 2, IWM was up over 3, and you can see what was leading, okay? And again, what was struggling was these right here. A lot of them ended up red for the day because these funds are selling a lot of these just to raise capital, I said, because they need it. And so if that stops, guess what happens to the market? It starts to stabilize and go back up, but it has to stop. And you can see it's not as bad as you think it would be because look at Google. Google's like, what sell-off are you talking about? What pressure? I mean, Google's still the best performing performing Mag 8. Again, Google's still the best performing Mag 8 stock out there. I've been saying for weeks, just following this trend line, and that's all you're looking at. You just keep riding that trend up, running it up, right? And I'm even going to adjust this to get that touching there. I'm not going to make the same mistake I did with Tesla. But again, until it breaks that trend line, this is the trend is your friend. This is what it's doing, and look for it to take 300 and then really make that support, right? That's what you really want to see if you're a shareholder now. And so again, you look at the smaller moving averages, it's just riding it up. That's what it's doing right now. So it's looking good. So if that was selling off, this would be we would definitely be down more than 5%. And then there's Apple, second or third heaviest weighted stock, depending on what day it is. And you can see what's it doing. Just sitting there in a range, hadn't really sold off at all. So if this one was selling and Google was selling like the rest of them, we would definitely go down 10%. But so far, they're just holding up. It's broken this trend line. So again, I don't know if it's a distribution, just consolidation. If it's distribution, we're going to start heading down to like 259.93. We're going to break that, fill the gap at 254. If not, and all of a sudden it starts to move, just watch 280, all right, on Apple. I mean, it's amazing how it's holding up, but it is. And there's Nvidia, right? So we try to fill this gap. We hit the gap, bounce from the gap. Sometimes you do see them as support. So it didn't lose 180 or close below it, okay? And so now look for 184.11, which will get us above that trend line, above resistance right there, to try to close above that. That's really what you need for Nvidia right now. You can see on the daily momentum below 50, but the MACD hadn't totally crossed below that zero line. So bears are not fully in charge of this on the daily right now. Weekly, you can see it hadn't crossed below 50. You got a bearish MACD cross, but to me, this is like, it's definitely the momentum is stalled, but it's definitely indecision. You see how many times it's crossing right there? Okay, what's happening? All that fun stuff. So, but we need Nvidia to turn. I mean, we need volume, and that's a lot of volume. What you're looking at is just decreased selling volume. I mean, those bars are huge for crying out loud. And so, if you can get some decreased selling volume on in there, you can get a turn. But I mean, you see it there, huge volume. All of a sudden, boom, they go back in the market. Again, it didn't have bad earnings, but as I showed you, it has a history of selling down after earnings. And so that's why I said if there's one stock I don't want to pick to save the market, it wouldn't be Nvidia. That's for dang sure. I picked Google over that one for crying out loud. It just happens to be the heaviest weight, so you don't really have a lot of choice. And so just look to see if it can get above 184.11. All right. If we end up losing it and don't say we do sell down on Monday, just look for that 171 area for a bounce, because that would close that gap right there below. Looking at Meta, again, this one can't get off the mat. That's the 5-day moving average. We're even below that. Forget the 9. I mean, look at this. And the 21 or the 8 and 20, whatever you want to use. But what you're looking at very clearly on this to see, because it's pretty far down there now, like, will this thing finally start to form a rounding bottom? And the psychological level is 600. These round numbers actually do mean something. So see if this is going to form a rounding bottom. See if we can get a close above 600. You want to close actually and then make support out of like 611, I think it is. That'll give us a market structure shift. Again, momentum, I mean, it's not there. I mean, it's trying, but at this point in time, it's just not there. I mean, you don't even have a bullish MACD cross on the daily yet. Look how far down that is. I don't even think we're above the moving average in the RSI, but, again, on the weekly, the MACD hasn't quite crossed the zero line. We're not oversold on the weekly yet. So, don't count more downside out, depending on what the market's going to do. I think if the pressure lets up, I think we finally get that and it starts to move, but it's super weak compared to the others. Amazon, man, not only did it give all of its earnings gains back, it gave then some. And you can see this one on the weekly, how fast that momentum turned over. The daily here, I mean, oh boy, it's trying. But man, you broke that trend line. You end up breaking the 50 moving average. I mean, yeah, that one, look at that. I mean, what a drop. And it was fast, really, really fast. And it just shows you how well, because they had good earnings. I mean, that was that gap up. It just shows you how much more respect you got for Google and Apple for holding up, especially Google, holding up the way they are when you compare this, especially to like an Amazon or something. But that, to me, that drop was kind of surprising, honestly, to drop that fast after giving such good earnings compared to some of these others. AMD, and this is another one, you're in the gap now. It bounced on what? The trend line, like to the penny. So that's why we keep trend lines on here. That was kind of that, oh boy, if that breaks, we're going to get to fill that gap. And so definitely held. We wouldn't get rid of this other trend line right here, which is a smaller trend line. And so if it can hold this and start taking liquidity up above, 227, 28 is what you want to see. If not, if the trend line breaks, then, you can go ahead and pretty much book at least 187, then 174. Okay, actually about 173, 172, I think fills the gap completely, but there is like support and resistance levels below. And so, and semis have been under pressure. So that's why you're seeing this one. And that huge gap up, I mean, remember that wasn't earnings. That was the Sam Altman deal or something, right? And if we do get the gap fill, I mean, that's 35% right there. And again, we talked about SMH, and this one has more Nvidia and some of the others that are heavyweights on this. And we've lost that trend line. We did break down below this right here. Didn't quite get to the gap. Nice suck up to close back over that resistance / support area. And so see if that holds. You can see SOX, I believe SOX, if I'm not mistaken, I think the AMD is the #1 holding, so it kind of flips here. And so, this one is, I mean, if it's dependent on AMD, that's going to be rough, but versus Nvidia. But again, you got a gap right here. You can see it got filled to the penny, a little small gap, and it bounced, so it's trying to hold. But semiconductors in general are just under a lot of pressure. Make up what is almost 15% of the S&P, more than that on the Qs. And so like we said, when these roll over, the market's going to feel it. Okay, it just is. But there's been a lot of rotation into other places right now. You look at the pattern people are going to be looking at. If we do get this move up the rest of November, December, is it just going to be looking like a right shoulder? Is that what we're looking at? Or do we finally start to head back up? So I think that's what a lot of people are going to look at on a lot of these ETFs for sure. No doubt in my mind about that. You can see where resistance is going to be around that 290, 291 area. If we can get above that, then I think it's on. But until we get above that, it might just be a dead cat bounce. So you just got to kind of wait and see for market structure to fill out, because this was a quick drop on these ETFs right here over the last few days. Now, one person put the question in a little late for Saturday's video, so I was going to look at a few of these. I'll look at Circle and I'll look at CoreWeave right here and see exactly how they're doing. When you look over at CoreWeave, you can see this right here. It's the data center stock. I mean, just been absolutely trashed. And they all have the same kind of deal where they got that one pop and then dropped, right? And this one's at a critical level of that little high right there. If it loses this line, it has definitely all the hallmarks of going down to the IPO price. I mean, these stocks have just been obliterated. And, looking at the levels above, you can see it. Just follow the fibs. I mean, that's what you're looking at right there. If it starts to move up, it can break above 83.72, turn out in support. Then you got 94. Then you got 104. But it's going to have to be risk on environment for this to happen. And that has to be a big, big move up after this drop. And just like Iran, right? I mean, it's supposedly a data center stock, but also a crypto stock. And again, they all have this same level where they popped and then dropped. Everybody thought this was it. They're coming back up. Yay. Sapphire, same as that thing. There's that pop and drop. So, right now, data center stocks are not in favor. This is a theme. Okay. They all ran up real hard, taking a massive breather, massive dump. Okay. So we'll see if buyers are going to step in on these. And I think crypto is going to tell you if that's going to happen or not. Circle, speaking of crypto, is another one. This ain't even above its 5-day moving average. It looks like Meta in a way, right? Still got the 9 there, 21's way below, got this trend line. So, let this thing build out. Let it sit there and prove itself to you. You don't have to sit here and try to jump on a grenade for crying out loud. Let it at least get above the 5-day moving average. How about that? That's something I would definitely do, but it's up to you, not financial advice. Now, when it comes to earnings, not a lot going on because it's holiday week. We're getting to the end here. You got Zoom on Monday. Then we'll have Alibaba, Neo, Analog Devices, Abercrombie & Fitch, Cole, Best Buy, Burlington. And then Tuesday you have Dell, which is taking a dump lately. Workday, Zscaler, Autodesk, PagerDuty, and then Urban Outfitters, and then John Deere and Li Auto and some other Chinese stocks on Wednesday. We are supposed to have data next week, even though it seems like it's still tentative. I think they're deciding what they're going to give us and what they're not. Maybe we get PPI, retail sales, and then headline PPI, and then retail sales month over month Tuesday, as well as pending home sales, Richmond Manufacturing Index, and then CB Consumer Confidence. Then on Wednesday, you got unemployment claims, and then core durable goods, and then all this other stuff is pretty much tentative besides Chicago PMI. So we might get GDP, might not. What else? Personal income, personal spending we might get. So anyway, guys, hope you end up having a wonderful week. Like I said, I may put videos out, may not, depending on what's going on over the holiday week. Don't forget, sign up for the Trading View. 80% off Black Friday sale, 1 month free. Just hit the first link down the bottom of the description right there. And don't forget to hit that like and subscribe button on your way out. Think about signing up for the membership. Listen to McDonald's combo at $7.99. I keep that cheap for a reason. Just hit the second link down the bottom of the description. And I will see you guys when I see you. Have a great holiday week.